and welcome to the closing beat, everybody. Happy Wednesday to you. The week is just going right by, isn't it? Very quick start to the week. Well, it's hump day, right? So the week's almost over at this point. We are financial advisors here at Jazz Wealth. I believe the only advisors that can actually talk about the markets on a daily basis and teach you something along the way. So we appreciate you guys watching. We're going to get right into it. We also do wine and wealth classes on Thursdays. See, I was joking. We're going to get right into it. Wine and wealth classes on Thursdays. We've done May financial review. We've done the sell in May and go away stats on that one there. Eric did a review of everything start to finish. If you're joining us here at Jazz, and last week I covered how to build wealth start to finish, including what you need to do to even consider starting to build wealth. Anyways, let's talk about the stock market here today because, we got mortgage applications out this morning. A little bit of econ data. We haven't had that the past couple of days. So we had a reason to kind of get the day started. Unfortunately. What? Well, I'm too hot? Coming in hot today. All right, we put it down here. You know what I mean? All right, I'll help you out. Here's the mortgage data that's come out. It's not my data. It's not my opinion. This is what it is. Mortgage applications trending lower and lower month over month. And we've got the interest rates here. We went from about 8% down to not quite 7%, but we're down in that range. That is the 30-year average mortgage rate that MBA puts out there. So is that good news? There's a lot going on, right? Inventory is even just a touch higher there, but yet applications to buy those homes are down, and even though rates are down. So that kind of got our day kicked off, and the market didn't care. It was basically a strong start to the day. If we look at the S&P here, we have, there we go. Yeah, there it is. So today's pullback in the stock market, which really started kind of midday, if you want to take a look over here. We started off pretty much flat, slight gain if you're looking at the S&P or the NASDAQ there. And then the Fed minutes come out right around 2 o'clock here. If you can happen to see it. Yeah, you can see it. Great. And that's where we started bleeding a little bit lower. NASDAQ finishes the day about even for the day. The S&P down about 0.25%. The Russell got hit the hardest. Why is that? The Fed minutes came out, and basically we found out, they're a little more concerned about inflation than they let on. Now, the Fed minutes are not new. Remember, although it seems like that's the news for the day, this is actually old. These are the minutes of the meeting. If you've ever been on a board, somebody takes the minutes or the notes of what you talk about from the meeting. The meeting, we already had the meeting, right? They told us. So it's not really the newest news, and we got a little blip in the overall decline in the market there. But the Russell took it the hardest there. It is now only 3% year to date, by the way. Because if they're concerned about inflation, then that means higher rates for longer and possibly less or longer duration until we see rate cuts. Well, who does that hurt the most? It hurts the smaller companies that don't have the borrowing power that everybody else has. So nonetheless, you saw that about midday, give you a little bit of excitement there. And, that's it. Like I said, it's not new news, but nonetheless, that's what you've got there. There were only 4 sectors that were higher on the day here. Bet you can guess one of them. Not by much, by the way. But the tech sector was one that was higher. It was only up 0.2%. Healthcare, we use the XLV to take a look at that one there, which has done a good job trying to get back to 52-week highs if you happen to look at some of the underlying stocks, the insurers and stuff in there. Largely tech, but communication services is what they call it. That was up 0.1%. And industrials. Up as well. Nope, that's biotech. Typed the wrong symbol there. Industrials a little bit higher as well. I don't know why materials came up, but that's all you've got. So those 4 sectors were higher. Everything else was lower. The worst, by the way, was energy here today. If you look at the price of oil, that's going to be your reason. So almost new lows in the short term here for oil. And by the way, I'd point out that gold retracing really aggressively as well. Remember, gold does that. That's just how gold behaves. I'd like to point out something here before we move on. This is the ETF that tracks the VIX, right? And so the VIX broke 12 for the first time in over 1,150 days, right? Remember that the VIX, there's a saying, I didn't create this, a guy on the radio did. The VIX is low, you go. The VIX is high, you buy. Well, if we look over here at the VIX, it's low. Right? When the VIX is low, there's this level of complacency, happiness, no fear in the stock market, and that tends to be when people suggest you should consider taking some profits on things that have had an extended run, or maybe like NVIDIA had a nice little pop after earnings here. So that's where we stand on that one. And for this length of time, Nobody's scared, right? No volatility, less volatility in a stock market. Now remember that the VIX is a little bit more manipulated these days, not intentionally, but thanks to the covered call ETFs. So it's not as perfect of a fear indicator as it used to be. We could probably do a class on that at some point, but that's where you stand in that case. Did I point out the Russell 2000 being the weakest here today and pulling back? The Russell lost almost 1% on the day. And it didn't matter where you looked. It was the whole across the board. Small caps had a hard time getting through some of that. All right. Since there's not a whole lot to cover, we took a different approach this week. Yesterday, we started covering some of the most correlated AI stocks to NVIDIA, trying to give you some other ideas where to look. And I promised you today we would continue with that. So we're going to do just that. Today, we're going to look at the designers, people that actually design, but don't necessarily make the chips, right? So it's a lot of that AI-driven software and, of course, human know-how to get that done. The names on the screen is what you see there. These names are 48% correlated to NVIDIA, so, well, let's see. NVIDIA is up after hours about 4% there, thanks to their earnings. We'll cover it in a minute, but just selling the devil out of stuff. And so these are the names to look at. Some of them you may recognize, some of them you may not recognize. Broadcom is a pretty obvious one. Now it's just AVGO. It used to be BRCM. If you're old enough, you know. These guys are interesting. I'm not telling you to buy the stock. I'm just saying these guys are interesting because their focus, you know how every company has a mission. Well, these guys are like, hey, we're not going to go chase what's hot. Kind of. But we're going to look for what they call durable markets, meaning things that they can sink their teeth into for 10 years or more, 10 to 20 years, their time horizon, and build a moat. They want to get into a space, and then they want to be so competitive in that space that people just can't keep up with them. And what does that allow you to do? And by the way, they've done really well. If you have a competitive advantage or you've decided to go into some area of your particular market and you can dominate, what does that mean? It means you can hold on to your margins and probably drive your margins higher. These guys have proven that they can do that. If you look at the gross margins of those semiconductor solution stocks that are out there, Broadcom ranks in 4th place, being able to hang on to their margins. That's what happens when you take that aggressive approach as a business and you don't try to chase everything else that's out there. Moving on, some of the other names, well, I'll give you another one. Marvell on the list there as well. I find this one fascinating because Marvell says, hey, in the AI space, we expect our revenue just from AI, not total, they do a lot more than this, but just their AI revenue to be 1.5 billion. I think they do about 5.5 billion a year. So they expect to do 1.5 from AI. And then in 2026, $2.5 billion, half of their total revenue from AI. So that's what you've got if you look at those sort of things. That is that category. Again, 48% correlated to the price of NVIDIA. Moving on, we've got the manufacturers. Yep, there you go. There's a lot of them out there. These guys are 45% correlated. You may recognize names like AMAT, CLAC, ASML, LRCX, Lam Research, Teradyne, etc., that are sort of popular that you can see, or that make headlines every now and then. You know what I'm saying? Like sort of brand name, I guess, if you want. ASML, anyways, they're not based here in the United States. I believe they're based in probably the Netherlands, if I'm correct there. These guys are interesting because they say, hey, with what we have, they believe, and so far have been correct, no one can replicate our technology for at least 10 years. Pretty cool there, huh? They also spend a multiple of what everybody else spends on R&D. So they're dedicated to being at the forefront of all of this. Now that's maybe a pro and a con, right? Because what do we not want to see people do right now in this type of economy? We don't want to see you spend money on research and development. We want to see you returning cash to shareholders. Remember the chart that I shared with you there? Anyways, if you look at those, that is the update here for today. These two categories here, and yesterday, by the way, are the most correlated to whatever NVIDIA does. So if you happen to look at these stocks tomorrow and go, why are they up about half of whatever NVIDIA is? There you go, right? A little lesson for you. Let's do some stocks in the news here, and I'll take your questions. Oh, before we do stocks in the news, let's move on over to our leaderboard.
Yeah, we got a star-studded leaderboard today.
Star-studded leaderboard?
Studded leaderboard. We got Darren R, leading the way today. Carolyn, Scott, Thomas, and Bubba C. He's back on the leaderboard. So that's your top 5 for today. Jazzwell.com/guess the Dow.
Look how close they are, too. 39,640. That is correct. 39,542. Ooh, okay. With 2 days left to go. Very good. I like it. I like it. I like it. Feel free to play if you'd like to play. Let's go on over to stocks in the news and then, take your questions and all that other fun stuff. Hey, BuzzFeed, this was early morning news here. Vivek Ramaswamy apparently has a 7.7% active stake in a company. That is huge for any other company, right? If somebody if you're like, Bain Capital has like a 7.7% stake in Colgate, you'd be like, holy cow, that is a lot of money. Let's just think about this for a second. 7.7% stake in BuzzFeed, which just got announced today, which means he's been building that stake. If he built it around $2 a share, that means he invested about $5.5 million. I'm not trying to discount that. I'm not saying that's not a significant sum of money, but, it's a $2 stock, so there's that. Amazon in the news there. AWS is going to, or that division, AWS, they're going to spend about $15 billion to build their next data centers over in Spain, likely with the understanding that there will be no, inquiries, justice inquiries, things like that. Bet you see that. Primarily, the biggest name in the news here this morning, Target. All right, so you get a feel for this, right? Target and Walmart say, we're going to go ahead and lower our prices on a whole lot of stuff. 7,000 products for Walmart, 5,000 for Target. They're not doing that because you guys are buying the devil out of their products, right? Target comes out today and they say, hey, our sales are down 5%. Yeah, right? Is that like a shocker? Well, we know that. What was kind of interesting, if you look, the stock was down quite a bit too. The sales by segment were down mostly in discretionary spending. Ooh, that's not a good sign if the economy is really strong there. I like to look at the average ticket size down, and then Target does one more thing. They track you. They know, you ever see someone's accused of murdering their husband, and then they show a video of, they were walking through Target and they bought the shovel and the rope, right? You've seen that on whatever those channels are. They track you. They track the traffic. Even if you don't buy something, they're tracking the traffic. Well, that was down as well. And really the only, if it's a good thing, I don't know, but the only maybe positive there was their online sales as a total percentage of their revenue, 18.3%. So good for them. Not good for these guys. Petco. This is likely a little short covering. Look, okay, they had one good quarter recently, which is this one. All right, they're still in a lot of trouble, right? Still struggling here. Beat on earnings, guided basically in line. And we're like, okay, good for you guys. What else you got? That's where that stands. TJ Maxx. Let's go over here. TJ Maxx hitting new highs here today. Growth is an issue. We've seen all the retailers say we're seeing less traffic, less ticket sizes, less total spend, right? Less total number of tickets. Well, the same is true for TJ Maxx, which is TJ Maxx, Marshalls, and Home Goods. Home Goods being the one that stands out here. If you look at the growth rates here, COVID, oh my God, look at Home Goods just taking off here. Yeah, we're all at home, and we want that sign that says live, laugh, love, and right? So you go to Home Goods and you're like, I'm gonna buy the sign. So all of that is sort of, how would you say it? Coming off from the COVID time period. However, we still see sales slowing. So not even the discount retailers like TJ Maxx and the others, Ross Stores and everything, are immune to that. Nonetheless, they are the only ones so far during earnings that could say we still have growth. We just don't have as much growth as we did before. So don't compare that, right? Williams-Sonoma. Here's another example. Yeah, people are spending less on these things. It's expensive, right? So they're spending less on this. All in all, they beat on earnings. That got you started. Oh, but wait a minute, our sales, they're not quite as strong as they used to be, and then we're going to have to lower some prices, be more competitive, and maybe have some incentives and give some coupons and have some sales. Oh, well, look at that. Stock price responding to that throughout the day. Totally makes sense. And then there's NVIDIA. Where is NVIDIA? Up $50 after hours. It's $1,000 stock, basically, right at this point here. Yeah. What do you say? If you have a company and your sales are up 260 something percent. Yeah, you're doing pretty good, right? Well, that's what they did. Only we're talking lots of billions of dollars, just so much money there. So much so that maybe this is a Dow play here, but they're doing a 10 for 1 stock split, which would put them around $100. Remember when Apple did that? Remember when the others did that? Why would they do that? Oh, maybe a little bit of a play? A little forward looking? I don't know. We'll see. There's my prediction. Tomorrow, you got Dollar Tree, Intuit, Ralph Lauren, retailers, lots of retailers out there. Deckers, Ross Stores. What do you think they're going to say? A little insight today. I thought Synopsys was, well, anyways, it's tomorrow, after hours there, and Workday. So we'll get a little attention in the after hours there. If you have any questions, I'll be happy to try to take your questions here. If not, I'd like to remind you guys, USA Today ranked us as the 66th best advisor in all the United States. And so that's nice. You know, we're not letting it get to our head, though. That's it. 10 shares, now great, or now 100 for great for cover calls. Well, yeah, if you like that sort of thing, because you don't get rid of, keep in mind, if you drop the stock price by 10 and just, multiply the number of shares by 10, you don't get rid of the volatility, right? So it's attractive for the smaller short-term trader, investor, and or day trader because you want the volatility. Of course, you want volatility there, but now it's not $1,000 a share. So maybe that's what they've got going on there. So we'll see. That'll be, I didn't catch the date on that, by the way. We'll see. I'll have to look that one up. So if you're looking at that. What are your thoughts on ARM Holdings? What do you mean? Help me out there. Here, I'll just show you like the chart. At what part of this, and I'm not picking on you, I'm just saying, like, what part of where we're at suggests that this is the at least opportunity or opportune time to take a little risk with your dollars? I don't see it. Right at the top of a downtrend here, course parabolic there to the downside, and all of a sudden back to the upside of this downtrend here. I'm going to need to see it move above that. I'd like to see the clear skies ahead a little bit. Yeah. But help me out with your thoughts there, because it's a tricky thing to answer. Like, hey, I own it. Should I sell it? I can't say that, but like, hey, I'm thinking of buying it. Hey, I'm peeling out half of it. Give me something there. You know you don't want to talk meme stocks, but oh my God. Yeah. What's the weird GME filing to eventually sell 40? No. So we covered that the other day. They did a shelf offering the last time this all happened. They're playing you guys. I would play you guys too. I would do if I was in any form of management to make a decision there, I'd be like, this is stupid. Let's do it. So a shelf offering, and I think Cody said that even Kramer talked about it with one of them. A shelf offering is their way of getting those shares ready and being able to sell them at a moment's notice. Like literally grab their phones and go, oh, sell the shares. Suckers. Sell them for $50 a share or whatever it is. Is it a good time to jump into utilities? That is a question I don't normally get, right? So utilities at the moment is the leading sector year to date. I have a little problem with that, right? I'm kind of contrarian in nature. Oh, now that it's the leading sector and it's had this great run, now you want to chase it? That's like saying I watched the house on the corner. It was 100,000, now it's 200, and tomorrow it turns out to be 250, and you go, now that's when I want to buy it. Really? I would hold tight. Plus, you just had this very extended run. I believe we covered that last week on the forward performance after such a run like that. You're kind of fighting against the grain a little bit, I always tell people, pretend that I just gave you $1 million and I said, be my advisor, right? You pick something, whatever you want to invest in. How are you going to justify to me that you paid over the average price that anybody in the last 20 days, 50 days, 200 days, anything has paid? I don't think I'm going to be very happy with you. You know what I mean? UVXY, time to play this with the VIX move. No, UVXY is a purely overnight position. Take a look at their prospectus. Careful. We don't buy and hold things like that, or you shouldn't. And even they will tell you that. It's like page 2 on the prospectus will say, yeah, this is for overnight only or day trading. What's your guess on the first Fed fund rate cut and how big? Just a quarter point. And I see everybody thinks it's July. I have a hard time with July, right? I think this will be one of those rare years where you don't expect them to move around elections and they do anyways, and it'll be a quarter point. Yeah. Thoughts on DLR. So DLR is them and Equinix. They're related by transaction, not by just being in the same industry there. I don't like the idea of, and I'm not good at, I'll just be honest with that, I'm not good at guessing that something that's moving sideways is going to magically wake up because I put dollars into it. You know what I mean? I would rather let it go and then just buy the next pullback. You know what I mean? Instead of voluntarily jumping into something that's moving sideways. Yeah. Oh, yeah. Good stuff. I'm done. I'm done. I have, if you don't know, I'm like getting my house ready to sell. I'm behind. So I'm behind on everything and trying to catch up. So I'm going to wrap it up there. Hey, you guys enjoy the rest of your day or evening. I hope you learned something. All right, a little bit of different stats here by checking out Jazz Wealth. Hope you'll do that. Stick around with us. Something about the subscribe button, if you'll hit it, thumbs up, all that happy stuff we're supposed to ask on here that I always forget to do. And we'll see you later. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar. I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.